Hey everyone, welcome back to Kitco News. I'm Jeremy Szafron. Well, as millions of Americans head to the polls for a close and consequential 2024 presidential election, investors are watching very, very closely. The S&P 500 rose 1% on Tuesday, with traders anticipating the outcome of the high-stakes election. Now, gold prices edged higher in midday trading as investors sought a safe haven amid the uncertainty. Now, spot gold was last trading at around $27.40 US dollars an ounce on the spot side. Now, this tight race between former President Donald Trump and Vice President Kamala Harris has brought increased market tension, with major questions around which party will control Congress. Now, a sweep by either Republicans or Democrats could significantly influence future spending and, of course, tax policies. Gold, in particular, has had a standout year, poised for its best gains in 45 years. But what could this election mean for the metal's performance as we close out the year and head into 2025? Well, here to break it all down for us is our trusted technical analyst, Gary Wagner, also the editor of the goldforecast.com, who's, of course, has been making spot-on calls this year. Great to see you, Gary.
Great to be here. Great to be here. Thanks for having me.
Well, listen, obviously there's a lot to get to today with the U.S. elections underway. We find ourselves kind of in the in-between, I like to call it. Of course, we're waiting on the results of that election, and then we have this upcoming FOMC meeting this week. But Gary, let's start off by giving a little history lesson here. I know that you got some interesting facts, because if you look back to past election years, can you tell us how gold has done historically between Election Day and the end of the year? Are there any patterns you're seeing here?
Well, there's some interesting facts. I don't know that I can make or draw conclusions, but I did some research back to the Reagan administration in 1980. By inauguration, it went down 12% during his first term, minus 46% at the end of his first term. His second term, it went up 23%, but also down 10% from the election to inauguration day. In terms of what stands out is really J.W. Bush and Obama. With J.W. Bush during the two terms from 2000 to 2008, gold rose about 120%. Wow. That's pretty significant. And Obama, interestingly enough, in 2008, when he was elected, gold gained 18.5% between the time he was elected and the time he was inaugurated, and then went up 133% that year. The second year, it was unchanged between Election Day, when he got reelected, and inauguration, and it gained 23% over the next 4 years. The only other thing that might give us some indication, when Trump won in 2016, went down 5.4% between Election Day and inauguration, and up 47.9% that 4-year term.
Yeah, fascinating. I mean, as you mentioned, we don't have enough data. Trump didn't get in for that second term, but I guess we can kind of look at the first one. And if you look at Harris, I mean, it's quite similar to Biden, too. Both presidencies had fairly stable gold.
Yeah, really, when Biden came in, it was down 1.3% between Election Day and inauguration day, and it was only up 4.4% during the 4-year, the first part of the term.
Yeah, fascinating. You can always look at history for a couple of little nuggets. Okay, Gary, I mean, let's talk about hypotheticals. As I mentioned, we're still waiting on results. And if Trump comes out on top, what's your take on how gold could react here? I mean, he's known for that America First stance. So would you expect to see safe haven demand kick in, or would it be more about the dollar strength impacting gold here?
Yeah, the way I look at it is the primary thing that we see gold react to is uncertainty. Mm-hmm. So the more certain the outcome, the less significant of a move we're going to see in gold. But the one thing that stands out, because we did have a term with Trump, and he stated that he will reenact tariffs, if Trump wins and tariffs come back into play, that is an inflationary pressure, because American citizens are paying more for imported goods, obviously with tariffs, and therefore we could expect more pressure on inflation. How high it might go, Where it might go, it's too early to tell. But we do know historically that when the government relies heavily on tariffs for imports of foreign goods, that creates inflationary pressure. And so that's the primary thing. The second thing, and I think it might be true for both candidates, is Trump spent a lot of money during his term in office and created a larger budget deficit. And a budget deficit, of course, has certain reactions in terms of the economy itself. But the Biden administration, and we can't extrapolate too much to the Harris administration, if that comes to pass, as much as we can say if she does revamp Medicare and if she revamps Medicare, that's a costly procedure, and that would add to the budget, and that would create more fiscal debt. And we know the problems with greater fiscal debt and the things we have to watch for and the uncertainty that that can create in terms of the economy. So that would be the best way I'm viewing the outcome with Trump and with Harris. With Harris, I'm concerned about too much fiscal spending. With Trump, I would be worried about too much fiscal spending as well as the effect of tariffs.
Okay, interesting. So do you think that the dollar could actually outshine gold in a little bit short term if we see, fiscal conservatism take the lead here? I mean, if we see a little bit of decrease in spending, or would the momentum behind gold keep steady because of, what we've been seeing throughout the year?
Well, we certainly could. I'm not going to venture to guess to say if it would or wouldn't happen. But what I can remark on is the fact that a unique component to the parabolic move that we've seen in gold recently, considering that by the end of 22 to currently, it went parabolic really almost this year. It's the most parabolic that I've ever seen it on a monthly chart. Mm-hmm. And the interesting thing is gold has gone parabolic and the dollar has been strong. And that's the relationship we've seen recently, which is dollar strength and strength in gold working in tandem. And that's a unique scenario considering that there's an inverse relationship between the dollar and gold. In fact, 100% negative correlation because of course, here in Canada, we're pairing it against the dollar. If the dollar goes up, it has to take gold down in an exact amount, which makes the moves up in gold more significant because they've overcome dollar strength. So that's how I would view that question.
Interesting. Okay. Well, you've said in the past that geopolitical stability can ease some of the risk premium that's kind of built in here, but with the macro environment that we're in, I mean, it's a fascinating one to say the least. Do you think that gold's already built-in momentum is just too strong to be sidelined by political stability here?
I've heard that from some analysts. I am going to sit on the fence in that we have to acknowledge that the geopolitical tensions around the world have been a component, whether it's a major component or a component as strong as other components, especially the election. And as long as the war in the Middle East rages, and as long as there's an escalation between Russia and Ukraine, and there certainly has been with North Korean troops now entering that area or that arena, it opens even if it's a minute possibility that this could involve more countries and become more globally, a more global scenario, one that's exceedingly scary, and two, that uncertainty would be highly supportive of gold.
Yeah, obviously, as I keep mentioning, we're in that in-between, so we're waiting on results, but let's just keep giving these hypotheticals for the audience, Gary. Let's say results are delayed, or even they're contested. How high do you think gold could go in that kind of an environment? I mean, are we talking about a parabolic spike, like you were just saying, or is there some resistance levels that you're eyeing, possibly?
Well, my number has been $2,885 is the top. We hit 2,800 on an intraday basis in futures, very close to that in spot. If the election is too close to call, everybody acknowledges that. Mm-hmm. If Harris wins and it is contested, if it's a blowout, no matter how hard it's contested, I don't think it can garner much steam because the numbers speak for themselves. If it's an exceedingly close race and contested, that would drag out the timeline until an announcement, and then possibly it being contested. That would have enough energy to really ramp up the uncertainty level. And if that happens, that would be bullish for gold, but it'd be bad for the country. So I'm hoping that doesn't happen, but that is a scenario. A contested election could easily fuel the uncertainty factor that's intrinsic to why gold moves higher, could definitely get involved, come into play, let's say.
Okay. Well, then let's talk about the other side. I mean, if we get a fast result and there's a clear winner, do you see something that's leading to some consolidation in gold, or do you think it'll still push higher relatively quicker to that target you mentioned last time we had you on of 28.65?
Well, if it's a quick result, I think that the relief, regardless of the candidate, because the economic policies between the two candidates is vastly different, but the citizens of the United States that are voting are almost deadlocked as to who they believe should be the next president. So it would take the uncertainty out tremendously if there was a quick and decisive result on either side. And if that was the case, it could lead to some pressure on gold to at least trade sideways or lower, because I think a lot of the value of gold right now, recently over the last couple, let's say month or so, has definitely been intrinsically and tightly tied to the uncertainty of the election outcome. If the outcome is clear, that amount that was factored into it as a premium would slowly dissipate out of the price. And that would be a scenario in which you could see gold move lower.
Yeah. Fascinating to watch. What a year it's been, hey, Gary? Okay, let's talk about the elephant in the room here. Obviously, we have the election happening, but we also have this upcoming Fed meeting, which is going to be huge from the FOMC. Of course, the CME FedWatch tool is pricing in a 99% chance of a 25 basis point rate cut on Thursday, following the outsized 50 basis point rate cut back in September, and then a 76% chance for another one in December. So I guess my question is here, Gary, what's your own Fed outlook? And is the market underpricing or overpricing something here?
My belief is if that's the elephant in the room, it's a very miniature elephant, maybe 2 or 3 inches tall. Okay. It's not really, because I believe that the Fed will, in fact, cut rates by 25 basis points at this FOMC meeting, 25 basis points in December. Now, if that occurs, I believe for the most part, that's basically been priced in. The only thing that would add, make it become a big elephant, so to speak, is if they decide to pause this month or raise it by 50 basis points. A 50 basis point rate cut this month, I think is, well, according to CME, is 99% that they won't. Mm-hmm. I don't put that as a likely scenario. And I don't really put a pause as a likely scenario. It's more likely than a jumbo cut, but I don't see that as the outcome. But if either of those were the outcome, it would affect gold, but I don't see that as happening. I also believe that they will carry through with their goal, which is to normalize interest rates by next year to about 3 to 3.5, closer to 3.5. And for the most part, I believe that the next 2 rate cuts are fully priced into the price of gold now.
Yeah, interesting. I mean, you put the end of year target for gold at 28.65. We keep mentioning it here with the recent consolidation around 2,700. You know, gold's up more than 30% year over date. So I guess the big question is here, Gary. I mean, is there a new price? Where's the floor here? Have we entered in a new phase where we see a new price floor for gold?
Well, on a technical basis, it's hard to say. If we could put up, I have a monthly chart that we've prepared. If we could put it up, I'll tell you why it's very difficult to talk about the floor, and I see that that's come up. You can see that over the last year or maybe 8 months, it's gone parabolic. You've got almost a straight line from January 24, when it was sitting at $2,000, up to now, which is just, and we're looking at spot gold, by the way, of about $2,700. Absolute floor, if you look on a technical basis, it's this triple top that occurred at 2000. Do I think it would go that low? I do not. But if we go back to the middle of 2011, when gold ran virtually from 1,000 to 1,900, by the middle of 2011, from 2011 to the end of 2015, it moved back down to 1,020. It halved. So is it possible at all? Well, we've seen that historically happen. Typically, a parabolic rise up is followed by a pretty dramatic fall down. And whether or not that happens, we'll have to see. But the one thing that myself, as well as other analysts, have talked about is gold has moved up so quickly, so strongly, that it's almost given at least short-term traders the desire to find a place to just whack it, to pull profits. But the underlying things that have been supporting gold and taking it higher, which is the election and geopolitical tensions worldwide, because inflation is starting to tick down, as long as that geopolitical, the problems that exist remain, that will be highly supportive. And so in terms of a level of support, even a pullback to 2,600 would be realistic. It wouldn't surprise me. A pullback well below that could happen because of the way it went up parabolically. But to me, fundamentally, and I am a technician, but I'm a hybrid technician. I look at fundamentals first and then use the technicals for placement, where to enter and where to exit, what's logical support and resistance levels. I don't see there being tremendous pressure to the downside to take it to technical support, which when you looked at that monthly chart, you can see that triple top that comes in right around 2,000. I don't see it going back down 700, but that's the strong level of technical support. But it is the fact that it's moved up parabolically that puts up my alarm buzzard, so to speak, to be careful and watch for something that might create a rationale or reason to really sell into the market. I think that gold has got a lot going for it. I think we're looking at new levels. And as I said, I would like to see a correction at some point that would be healthy, but I'd like to see it come down maybe to 2,600.
Oh, interesting.
My target of 18, and then lastly, my target of 28.65, we've hit 28. If that's all we get, I am completely satisfied. It didn't hit my target, but it certainly went really close to it. And I would be really happy with that.
Interesting. Okay, well, before I let you go, so if the profit taking comes into play and we see gold dropping to 2,600, even as you just mentioned, would that actually be a buying opportunity given your longer term outlook here?
Absolutely.
Yeah.
Recently, what we have seen is even when it went down, and now I'm quoting futures pricing, when it went down to around 30, they bought the dip. There was, every time we've seen dips in gold recently, traders have come in and bought that, used that as an opportunity. So a deeper sell-off would really entice investors that felt they kind of missed the boat on this first huge parabolic move. And you would find that that particular price point getting filled quickly and moving back higher, yes.
Yeah, well, a fascinating time. Gary Wagner is the editor of thegoldforecast.com, joining us from bright, sunny Hawaii. I hope it goes well for you this week, Gary, and we'll have you on in a couple of weeks so we can really unpack the results, what happened, and where gold's going from here.
Thanks so much for having me.
Thanks, my friend. Appreciate it. I'm Jeremy Szafron. For all of us here at Kitco News, thank you for watching. Stay tuned. We'll have some great election coverage on markets, the impacts, and of course, some great guests coming up. We'll see you next time.